Okay, good morning all. Just quickly to recapitulate, in the last class we briefly discussed about what is the concept of capital budgeting. So capital budgeting is an exercise carried out for the purpose of planning for capital expenditure. Capital expenditure, there are few specific characteristics. One is normally capital expenditure is of a large value. And secondly, the benefit arising out of a capital expenditure is spread across years. Unless some expenditure which is generally referred to as a revenue expenditure where the benefit is for a limited period. So if you are going to decide on investing in a business in the form of either starting a new business or purchasing a machinery for your business or expansion of your business or diversification of your business or whatever, any expenditure which is of large amount, typically large amount in the sense something more than just a ballpark number, okay, something above 1 lakh, 2 lakhs, 3 lakhs, depends on the size and nature of the organization. But every capital expenditure by nature, it's of typically large value, and the word capital itself, you know what it is. Capital is just something not a revenue expenditure. So a budget for a capital expenditure is what we refer to as capital budgeting. Now, capital budgeting assumes significance for 2-3 reasons. One is, as I said, the results of your investments is going to be spread across a span of 5 years or 10 years or whatever it may be. It is not something within a year. And when it involves a time period beyond a year, automatically there is a aspect of time value of money coming into play. The time value of money is nothing but the value of money loses its real value over the period of time because of conditions like inflation, etc. So I gave an example in the last class, a chocolate which is costing you today 1 rupee. Next year it could be 1 rupee 25 paise, and the next year it could be 1 rupee 50 paise. Or a pen which is going to cost you 50 rupees today could cost you 60 rupees next year, could cost you 70 rupees the following year. So that means the same product, but the value of money, since it is decreasing over the years due to various reasons, particularly like inflation, you are not in a position to compare like apple to apple. Today's money is not equivalent to tomorrow's money. That's the point. The value of today's money is not equivalent to tomorrow's money value. Consequently, we are going to apply something called as a discount factor, etc., and arrive at what is the present value of tomorrow's cash flows. Because in capital budgeting exercise, we are going to use cash flows. Cash flows means, I told you, cash flow is nothing but your net profit after taxes plus depreciation. Depreciation being a non-cash item, net profit after taxes plus depreciation is your cash flow. So if you're going to invest 10 lakhs and the business is going to operate for next few years, you like to know what is the cash flow for the first year, second year, third year, fourth year, fifth year. And at some point of time, you should take back your investment. The money what you have invested in the business should be taken back. Then only it is a viable project or a viable capital expenditure. So we are going to discuss about two broader techniques. One is non-discounted or traditional techniques of decisions, which is referred to as investment decisions. And another one is called discounted techniques of investment decisions. Capital budgeting decisions are otherwise referred to as investment decisions. Non-discounting techniques, we are going to use concepts like payback period. Payback period is one of the important concept we use in that is called as non-traditional or traditional techniques, non-discounted techniques. So let me repeat, there are two broader techniques in investment decisions, traditional or non-discounted techniques. Another one is called discounted technique. Discounted techniques we'll be discussing about IRR, net present value, etc. And as far as non-discounted or traditional techniques, we are going to discuss about payback period and profitability index, etc. We'll be discussing this in detail as we progress. Okay. So before getting into that, there are a few things I want to cover before getting into calculation of your cash flows, calculation of payback period, calculation of NPV, IRR, profitability index, all that. And we have something called average rate of return. So on the traditional method or non-discounted method, you also have something called average rate of return. All that we'll discuss. But before that, kindly make a note. Kindly make a note. Did I give any notes in the last class? Did I give any notes in the last class? Did I give you some brief notes? Definition of meaning of capital budgeting and all that? No? Capital budgeting assumes significance because of scarce resources. Most of the entities have to decide what to do with the available capital. See, capital is scarce, we all know that. Capital is sometimes available internally. Sometimes you may have to borrow, but you cannot borrow as you wish. So you have limited availability of capital, consequent to which you have to decide on projects or capital expenditure the one which offers you the best benefit. So there is a ranking and there is a, for example, if you want to choose a project, you need to look at viability of the project, and we use something like NPV, net present value. If net present value of a project is positive, you accept the project. If net present value of a project is negative, you reject the project. That is based on discounting technique. So as I said before, going into discounting technique, I'll first focus on non-discounting techniques or traditional techniques. So make a note of this. The capital budgeting exercise is a technique or an exercise which is budgeting for capital expenditure. Capital budgeting exercise or capital budgeting is a process where we are planning for capital expenditure, considering that the available capital resources are scarce. Considering that the available capital resources are scarce, proper decision has to be taken regarding capital expenditure. Proper decision has to be taken regarding capital expenditure. And capital expenditure returns are expected over a span of more than a year in the form of cash flows. Returns are expected over the years, beyond a year, that is not less than a year, it's more than a year. And in the form of cash flows, and consequent to the time value of money applicable for the cash flows, time value of money applicable for the cash flows arising in future, we need to determine the present value of money for decision making purposes. We need to determine the present value of money for decision making purposes. The capital budgeting decisions are classified as 1. Investment strategies. Under that, 1. Replacement and modernization. So you like to go for replacement and modernization. That is a capital expenditure. You already have a machinery, you like to replace it, or you have a set of old machineries, you like to replace it with a set of new machineries. Let us say, for example, in a company, they are currently operating petrol operated trucks. They have 20 trucks. Okay, petrol operated trucks. And now, since electric vehicles are coming into picture, you want to replace the entire 20 trucks into electric trucks, because these 20 trucks were bought maybe 1 year, 2 years before, or 3 years before. Now we want to replace all of those 20 trucks into electric vehicles. So each electric vehicle is going to cost you some X amount. So you want to replace the entire fleet of 20 trucks. So 20 trucks into X amount. Let us say 50 lakhs per truck. So you have to invest how much? 20 trucks into 50 lakhs makes it as what? Is it 100 crores? 20 trucks into 50 lakhs. Am I right? 10 crores or 100 crores?
10 crores.
10 crores. 20 into 50. Yeah, 2 into 50 is 100 lakhs. Correct. 10 crores. So you have to plan for 10 crore expenditure. Now, when you plan for 10 crore expenditure, you need to decide, or you need to know what are all the benefits you're going to get out of that. What is the savings you're going to get out of that? Savings could be in the form of cost of petrol. For 20 trucks on average per month, you're using X amount of petrol. So for each truck, you can calculate, and for 20 trucks, you can extrapolate it and get the data. And you're going to get the benefit over the truck. Electric vehicles are going to give you a life of 10 years, let us say. So over the span of 10 years, you're going to recover the benefit of savings in petrol costs, maybe savings in maintenance costs, or whatever it could be. And then you evaluate whether, considering the time value of money, whether the decision to invest 10 crores today is a viable project or not. Is it viable or not? As I said, if I'm going to, I used the technique called payback period in the last class. We were discussing about that. If I'm going to get back my investments in 3 years or 4 years time, I'm going to get paid back. The returns are good because I save a lot of money in petrol, fuel, maintenance, and all that. So that is compensating well for my initial capital expenditure. So I recover all my 10 crores of expenditure in the next 5 years. Then it's a viable, good project. I can go for it. So the point is, it is a decision to replace or modernize. Sometimes you may like to modernize your entire factory. Then also you have to use capital budgeting decision. Are you clear? This is the first type of a decision you make with the help of your techniques of capital budgeting. You normally use discounted techniques nowadays, but non-discounted techniques can also be applied. Secondly, capacity expansion. First is replacement and modernization. Second is capacity expansion. You like to invest for expanding your capacity of your factory. Maybe by putting in more machines or by increasing the space of your factory and adding machines, whatever you may do. Whatever you may do. Capacity expansion. Vertical integration. Vertical integration. Vertical integration means in strategic management, we have discussed that. If you are a raw material manufacturer, you come down into what? Production of finished goods. If you are a finished goods manufacturer, you can go up to raw material. It's a vertical integration. And integrating in the value chain, what we call it. So let us say, for example, ITC is already manufacturing atta. Now they want to invest in making raw materials for example. So invest heavily on various requirements for that raw material. Atta means agricultural produce. You can think of soap also, a soap. ITC is making soap, they want to make basic raw material for soap. Or that they want to put factories. It's basically a decision to either go through the vertical chain of expansion. So it's called vertical integration. So decisions regarding vertical integration, then concentric diversification. You can diversify your business. Concentric. What is a concentric diversification? Any idea? What is concentric diversification? Am I audible to all of you? Suddenly
Yes,
there's no, I'm not hearing anyone. All of you are hearing me?
yes, sir.
So what is concentric diversification?
Sir, I think exploring into a specified area or developing other existing products and add new products.
Okay. Any other points on that? So, Madhumita, what is concentric diversification? Madhumita, am I audible? Madhumita, am I audible or not? It's not responding. Preeti, what is concentric diversification?
Maybe the company is planning to diversify into particular product line. Instead of spreading to all the products, they may concentrate on one product and try to diversify it throughout the place.
So you're all coming close to the answer, but you're all using wrong phrases. So that means you are still lacking clarity on certain terms and phrases. You need to get acquainted and familiarized with it. Concentric diversification means a diversification, as you all came very close. It's diversification into related areas, not diversifying into areas. For example, Hindustan Unilever is always into concentric diversification. They will not move out of FMCG, generally speaking. There may be exceptions. And ITC is conglomerate. They move to various things. It is not concentric. ITC is in various businesses. But if you take Unilever, Hindustan Unilever, they more focus on only FMCG products. So there are many companies like that which only want to focus on a specific, as you all said, a specific product category or a line and not going out of that. But there are many other companies which focus on different businesses. Reliance is into multiple businesses. It's called conglomerate diversification. This is just to recap what we discussed in strategic plan. So concentric diversification means, see, for me, if I expand my GCC Academy operations only into professional courses only and related courses, then it's concentric. I don't get into other activities. Like I don't get into, for example, again, concentric is very related to அந்த இண்டஸ்ட்ரிக்குள்ளேயே நீங்க இருந்தா அதுக்கு பேர் கான்சென்ட்ரேட்னு சொல்லலாம். அதெல்லாம் ரிலேட்டடா என்ன வேணா பண்ணலாம். பட் அதை பியாண்டா நீங்க போக மாட்டீங்க. So if I'm going to also take a decision on capital budgeting, I can use capital budgeting decisions for decisions regarding concentric diversity. From CH is an example. I'm in education industry. I want to only be in education. Then concentric diversification. I don't want to go beyond education. In education, I can diversify. That is also a diversification, but it's concentric. I don't want to get into any other thing other than education. FMCG companies like Unilever doesn't want to go beyond what? FMCG products. Clear? This is what we refer to as concentric diversification. Not one product, but they can do many things, but concentrating on similar activities. Understood or not?
Yes, sir.
Yes.
Okay. So, when we talk of expansion decisions with regard to concentric diversification, you can use capital budget. Of course, not necessary. Every type of diversification you can use capital budgeting decision making process. Conglomerate diversification. You know, just now I explained you what it is. Conglomerate diversification. Then these are all the decisions, capital budgeting decisions, where you try to decide on evaluating a proposal, whether it is good or bad, and then take a call. Then comes on the basis of firm's existence. First is expansion decision, and second, diversification decisions. The earlier was based on investment strategy as such, generally, but here your business expansion or diversification. So you want to grow your business. So for that you use capital budgeting decisions. On the basis of this various decision situations. One is mutually exclusive decision. Mutually exclusive decision means if you're going to have 10 crores at your disposal and you're considering two proposals. Proposal A, let us say, for example, you want to set up a new hotel. Proposal A. Proposal B, you want to set up a hospital. Then you need to evaluate which one is better, setting up a hotel or setting up a hospital. And eventually you find out project A is better than project B or project B is better than project A based on techniques of capital budgeting. We apply and check. So here mutually exclusive, by deciding on project A, automatically it means project B cannot be undertaken. Project A, project B cannot be undertaken or vice versa. If you decide on project B, you cannot undertake project A. That is what we call mutually exclusive decisions. Mutually exclusive decisions. Clear? So when you evaluate proposals, you decide on one of the proposals among the alternatives. That is called mutually exclusive decisions. Understood or not? Second, accept or reject decisions. Certain proposals you like to accept or reject on a standalone basis. Standalone basis means I am only considering one proposal. I am considering a proposal to buy a machinery, imported machinery, at a cost of 50 lakhs. And whether it is a right or wrong, whether it's a viable decision, I need to evaluate the proposal. I need to evaluate the proposal. So 50 lakhs as an independent decision, I evaluate it. And if I find it is offering me a benefit, I go for it. Otherwise, I reject the proposal. That's called accept or reject decisions. Independent proposals. Third, contingent decisions. It means if you're going to decide on A proposal, that automatically leaves you to do B. For example, if I want to computerize my operations, then it automatically means I have to completely air condition my office. Because the server requires air conditioned environment and all that. I'm going for a major computerization of my operations. I'm going to use complete mechanization, computerization, all that. Currently, it is little more manual driven. So it's involving an investment of 10 crores. But when I do so, automatically there are other contingent decisions. For example, let you know the examples of that. I decide on an ice cream business, to do an ice cream business. If I do an ice cream business, what is a contingent decision? Ice cream business na ice cream to factory machines அதெல்லாம் இருக்கு. அது தவிர அதை பேஸ் பண்ணி சில additional decisions நீங்க investments பண்ண வேண்டி வரும். அது என்னது? What is unique to ice cream business? Compared to any other business, like a soap. Soap business and ice cream business are different. Yeah. So what do you do with ice cream business? What are the contingent decisions you have to take? The contingent decision you have to take is whether I should buy refrigerated trucks or whether I should outsource it. Because ice creams are to be transported in refrigerated trucks. And not only that, I need to store it in an environment which is called cold rooms, cold storage. Ice creams have to be kept in cold storage. பயங்கரமான அதாவது maybe 0 degrees or minus whatever. So when I was in ice cream division in Unilever, we used to have cold storage facilities. So it could be like minus 10 degrees or whatever it may be. So your investment just doesn't depend on the decision to go for ice cream business, but that automatically requires you to further decide on what other decisions, like whether I should go for refrigerated trucks, cold storage, or I outsource it to a third party. If I do it on my own, my investment will be extra 5 crores. So whether my inflows, cash inflows are good enough to recover that 5 crores. Otherwise, what I can do is I can give it to a third party agent for a commission or whatever. He will do it for me. That may sound economic for them. So these are all contingent decisions. If I take A decision, then I need to decide on B. What to do? Clear? Any doubts?
No doubt.
Okay. Significance of capital budgeting. One, substantial expenditure or characteristics and so on. Significance or characteristics. One is expenditure substantial. It's very large in value. Second, long time period is involved. As I already explained you, when you go for capital budget, capital expenditure, long time periods are involved. 2 years, 3 years, 4 years, 5 years, 10 years, whatever it may be. Power projects எல்லாம் உங்களுக்கே தெரியும். Power projects எல்லாம் உங்களுக்கு செட்டப் பண்றதுக்கே 2-3 years ஆகும். அதுக்கப்புறம் so 5 years, 6 years ஆயிடும் revenue generation. So there are long gestation projects. So capital budgeting decisions நீங்க வந்து 5 years இன்வெஸ்ட் பண்ணிட்டே இருக்கணும். அப்புறம் தான் ரிட்டர்ன்ஸே வரும். Okay. Long time periods. It cannot be reversed. Once you invest your money, it cannot be reversed. That's a big problem. You can't take back that money easily. So we have to be very, very careful. And it can affect the future operations. The capital investment decisions, budgeting decisions can affect your future operations. Many companies, they've got a positive impact. Some companies, they've got a negative impact because of capital budgeting decisions. So investing heavily is not an easy job. You need to evaluate it carefully and decide on the merits of this, whether it's viable or not. Okay. Understood? Okay. Now, the traditional methods or non-discounting techniques. We cannot, the traditional or non-discounting techniques, average rate of return. Now, I'll share an Excel sheet with you. Kindly check if you're able to see that.
Sir,
Yeah,
I have a doubt, sir.
please.
Sir, painting of an apartment complex and all that, why won't it come under capital expenditure, sir?
Apartments.
Yes, sir. As in big
In
apartment.
apartment, what in apartment, what are you talking about? In big apartment, what is, you're talking about an apartment investing in something.
No, like, sir, I'm talking about repainting the whole of the apartment, like spending crores of money in a big scale, which also cannot be reversed and all that, no, sir.
Correct. So you are asking me whether it comes under the capital budgeting decision? Is
Yes,
that the
sir.
question? See, interesting question. Capital budgeting decisions are typically, the characteristics of a capital budgeting decision is something it is going to offer you a benefit in the form of revenue generation. In the form of revenue generation. So you are talking about an expenditure which doesn't give you a revenue generation option. By painting your apartment complex, spending 1 crore, is there any revenue generated out of that, additional revenue?
Yes, sir, you can
Exactly.
always charge more maintenance and all that, no, sir. Plus, it is the benefit it will give you is it will attract more tenants or people to buy houses in the apartment. So something of
No
that
problem.
sort.
No problem. No problem. See, one thing I'll explain you. It's a very good question. See, first of all, the word capital budgeting itself means decision regarding a capital expenditure. Now, we need to first of all look into whether painting an apartment complex is a capital expenditure. Now, one more thing in accounting, we all know that we don't determine the nature of an expenditure by sheerly the size or volume of that money involved. While deciding whether an expenditure is capital or revenue, there are various parameters we consider. And whether it fits into a capital budgeting decision-making aspect is first to be checked. Because just to give you the perspective, painting an apartment complex is a maintenance activity. Just because you have hundreds of flats and maybe 500 or 1000 flats in a complex, and you're going to spend 1 crore or 10 crore, does it take the nature of a capital expenditure? You paint one house. You paint one house for 1 lakh. You paint 10 houses for 10 lakhs. You paint 100 houses for 100 lakhs. But the number of houses are more, so the volume and value is higher. It doesn't change the nature of the expenditure as to capital revenue. Maintaining and building of a flat is a revenue expenditure and not a capital expenditure. So how can we then evaluate? So the capital expenditure goes on an assumption that there is something in return what you get. Maybe you're attracting a tenant etc. as a routine nature. You attract more tenants, you get more rent. That is all something revenue. Because you spend some amount, you will get some revenue back. That's all. But it is not a decision where it's going to add to your profitability. That is not the intent of the expenditure.
Okay.
Are you able to understand what I'm saying?
So painting of an apartment for the very first time will be a capital expenditure.
Along with the building, they make it, no? So this it falls into the cost
Okay.
of capital building. But when you repeatedly paint it, you can do it every year also. Painting you can do every year also, no problem. Or once in 2 years, 3 years, 5 years. But that doesn't modify the nature of the expenditure. It is still a revenue expenditure in my view. Because just because the all 1 crore the capital expenditure.
Okay.
So the capital budgeting decisions வந்து அதுல இன்வால்வ் ஆகாது. ஏன்னா அதுல ஒன்றும் ரெவன்யூ ஜெனரேஷன் கிடையாது, கேஷ் ஃப்ளோஸ் கிடையாது. இப்போ நீங்க வந்து நீங்க சொல்ற மாதிரி எனக்கு எக்ஸ்ட்ரா ரெண்ட் வரும் அப்படின்னா உங்களுக்கு 30 வருஷம் ஆகும் அதை ரெக்கவர் ஆகிறதுக்கு. The extra rent what you get may not be good enough to recover your entire 1 crore. First of all, another thing I want to tell you is these are all very important aspects to be clarified. என்ன சொன்னேன், capital budgeting decision is referred to as an investment decision. Is it an investment? Painting an office building or a factory building or a flat, is it an investment?
No, sir.
Not an investment. Because an investment is going to give you something in return. So that is how we differentiate. Clear? Good. Any other doubts?
Thank you, sir.
Okay, great. Any other doubts?
Sir,
Yeah.
why maintenance, I understand it's revenue, but painting, the benefit is going to be for 3 or 4 years, you cannot consider it as capital, sir.
A revenue expenditure is always revenue expenditure. You can defer it and call it as a deferred revenue expenditure. That option is available. If you are spending 1 crore on painting of your flat in a year, you can defer it, and because the benefit of the painting, you're going to use it for 5 years. Every year you write off 20 lakhs, 20 lakhs, 20 lakhs in a P&L or income and expenditure account. Our accounting principle permit that, because any expenditure which is of revenue nature but of high value, because of the matching concept in accounting and periodicity concept, etc., the entire 1 crore you can't put in 1 year P&L. So you defer it and show it as a deferred revenue expenditure. That is how we do the accounting treatment. Because the amount of 1 crore is involved, we cannot call it as a capital expenditure. இப்போ நான் எத்தனை எக்ஸாம்பிள்ஸ்லாம் நம்ம டிஸ்கஸ் பண்ணியிருக்கோம். ஒரு மேஜர் அட்வர்டைஸ்மெண்ட் எக்ஸ்பெண்டிச்சர் கம்பெனிஸ் லான்ச்சிங் அ மேஜர் அட்வர்டைஸ்மெண்ட் கேம்பெயின், அதுக்கு வந்து பார்த்தீங்கன்னா நியூ ப்ராடக்ட் லான்ச் அது வந்து பார்த்தீங்கன்னா ஒரு ஹைவே ஃபுல்லாக ஹோர்டிங், பெரிய பெரிய ஹோர்டிங்காக போடுறாங்க. அந்த ஹோர்டிங் வந்து ஒரு 500-1000 ஹோர்டிங் போடுறாங்கன்னா அதுவே 5 கோடி ஆகும். அப்போ வந்து அது என்ன கேபிட்டல் எக்ஸ்பெண்டிச்சரா? கிடையாது, டெஃபர்ட் ரெவென்யூ எக்ஸ்பெண்டிச்சர். பிகாஸ் ஹோர்டிங்கிறது வந்து அன்லெஸ் யூ கிரியேட் அ கேபிட்டல் ஸ்ட்ரக்சர், அப்போ வேணா நீங்கள் கேபிட்டல் எடுத்துக்கலாம். பட் ஹோர்டிங்கிறது நான் எக்ஸாம்பிள் சேக் நான் என்ன சொல்றேன்னா, இட்ஸ் காட் 1 year 2 yearல போயிடும். ஆனால் அது அமௌண்ட் வந்து 5 கோடி. ஏன்னா நீங்கள் எல்லாத்துலையும் போட்டிருக்கீங்க, ஆல் இந்தியா, ஆல் ஓவர் இந்தியா. அப்போ என்ன கேபிட்டல் ரெவென்யூ அது? Capital revenue. It doesn't become a capital expenditure just because it's 5 crores. So what you do in this circumstance, you defer it and you call it as a deferred revenue expense. That is an accounting practice.
Okay, sir.
Yeah. Any other doubts? Anyone else has gone? Okay. So formula, I'm going to, are you all able to see the Excel sheet?
No, sir.
No? Let's check now.
Yes, sir. It's just,
Okay. So first we are going to discuss about traditional or non-discounting techniques. Traditional or non-discounting techniques. One, average rate of return. The formula for that is average annual profit after tax divided by average investment over the life of the project the whole into 100. So this is your rate of return. This is without discounting, traditional. So average rate of return is calculated by using a simple formula, your average annual profit by average investment into 100. Okay. So this is one of the commonly used technique. Then there's something called payback period. Payback period. Payback period is the time taken for getting back your investment. Now, when there is a uniform cash flow, very important. When the cash flows are uniform, every year the cash flow is the same. Then the formula for payback period is equal to, it is calculated using the formula original investment or initial investment divided by uniform annual cash flow. Uniform annual cash flow can be annuity in per. So in the euro null, that is, let us say you are invested 10 crores. Every year you're getting a uniform cash flow of 1 crore. So what is the payback period? So 10 is 10 crores is your original investment. And every year you're getting 1 crore as cash flow. Every year uniform cash flow. So what is the payback period? Payback period is how many years?
10 years.
10 years.
Okay, 10 years. Now, what is the payback period is going to enable you to decide on a project. Normally, for example, would you be interested in, for example, let us say, payback period? I would prefer a 5-year payback period. I would prefer a 6-year payback period. I would prefer a 7-year payback period, etc., etc., etc. So, depending on the business nature, you can decide on 10 years is too much for me. I cannot wait for. For example, if I am going to expand, and for me the payback period is going to be 10 years, I may not be interested. Because I'm not looking at 10 years, because 10 years is too long for me as a proprietor or individual or whatever you may call it. Maybe for a listed company it could be better. So for me, payback period of 5 years and above is okay. So this is how you decide whether to go for investment or not. Very clear?
Yes, sir.
Yes, sir.
Then when the cash flows are not uniform, you have to do it in a slightly different way. I'll show you an example. You have to accumulate the cash flows and decide on the payback period. I'll work out some sample problems. Don't worry about that. But just I'm giving you the what are the various non-discounting or traditional techniques. Okay. Then we have discounting or discounting. This is traditional or non-discounting technique. Then we have discounting techniques. Under that we have got net present value. Net present value. NPV in சொல்லுவோம். Net present value என்னன்னா cumulative discounted cash flows. VCF னு சொல்லுங்க. VCF minus initial investment. Net present value is calculated as cumulative discounted cash flows minus initial investment. If this is positive, the project is viable. If it is negative, the project is not viable. Then you have got something called internal rate of return and payback reciprocal. So a net present value, then you have something called internal rate of return. I'll come to that little later. Internal rate of return is a rate, it is a discount rate at which NPV is zero. That is the rate at which NPV becomes zero. That is cut-off rate. That is, if your cost of capital is 10% and your internal rate of return is also 10%, then the project is not going to give you anything. It's just NPV becomes zero. NPV nale enna sonna, initial investment and discounted cash flows ku difference nu sonna. NPV positive irundha good. Zero irundhana IRR, that is a cut-off point. Any return above that is better for you. Any return beyond IRR is good for you. It is going to give you a positive NPV. Any return above IRR is good as it is going to give a positive NPV. And the reverse will apply. Any return, rate of return below IRR is not good. Because if your return is below IRR, don't accept that project. Then we have something called Profitability Index. Profitability Index. Profitability Index. Profitability Index means present value of cash flows, cash inflows divided by present value of cash outflow, present value of an initial investment, so no, present value of cash outflow or initial investment. Okay, now very important. If you look at NPV, cumulative discounted cash flows, present value of cash flows, minus initial investments. This minus is divided by, that's the difference. NPV is cumulative discounted cash flow minus initial investment, whereas profitability index is cumulative discounted cash flows or present value of cash inflows divided by initial investment. This is a division, this is a subtraction. There are two parameters same. Are you able to understand?
Yes, sir.
And if I got multiple proposals, I would like to compare by ranking the proposals. By ranking the proposal, and I'll choose the one which is giving me the best. So I would like to rank the proposals. If I have multiple proposals to choose from, I'll rank the proposals and decide on the one which gives me the better benefit. Are you clear?
Yes, sir.
Okay. Now, I'll give you some sample problem, particularly this payback period. I'll explain you how it is. Payback period and a traditional method where I'm going to tell you how to calculate the payback period when the cash flows are uniform and how to calculate when the cash flows are not uniform. Okay, so I'll show you an example problem. So calculation of payback period when cash flows are uniform, annual cash flows. Annual cash flows are uniform. So you know what is a cash flow, right? So I'll give you an example here. Here, 1, 2, 3, 4, 5, 6 years. Cash flows. Cash flows are the same. First year cash flow 10 lakhs. So every year it's same. Uniform cash flows, annuity in period. Okay. Now my initial investment in the project is 75 lakhs. Not 75 lakhs, let us say 45 lakhs. 45 lakhs. Now I am going to tell you how to calculate calculation of payback period. Okay, calculation of payback. So the question is about, you have a project in hand which you are trying to determine what is the payback period for the project. You got an initial investment for the project at 45 lakhs and this is the annual cash flows. This is non-discounted cash flows. This is non-discounted cash flows, uniform cash flows. So how do I calculate? Answer. Payback period is equal to, very simple. Your annual cash flows are 10 lakhs. Your initial investment is 45 lakhs. So 45 lakhs is my initial investment divided by 10 lakhs. Annual cash flows. It gives me 4.5 years. Payback period. What is my initial investment? So look at the formula I gave you here. Payback period. Original investment by uniform cash flow. My original investment is 45 lakhs. My uniform cash flow is 10 lakhs every year. So my payback period is 4.5 years. So I will decide on merits of this case by deciding, okay, 4.5 years is okay. Okay, 4.5 years is okay. Or maybe I may feel that 5 years is okay for me, or anything up to 5 years is okay. So I may decide for going for the project. When cash flows are not uniform, same example. Instead of 10 lakhs annual cash flows, I'm going to take first year 5 lakhs, second year 8 lakhs, third year 12 lakhs. Let us say this is the assumption. So this is my cash flow which is not uniform. Then how to calculate payback period? Very important. When I calculate payback period, I need to payback period calculation. I need to cumulate the cash flows. Carefully observe. I'm going to explain you this. I'm going to put a column called cumulative cash flows. 5 lakhs first year. 5 lakhs plus 8 lakhs is 13 lakhs. 13 lakhs plus 12 lakhs is 25 lakhs. 25 lakhs plus 15 lakhs is 40 lakhs. 40 lakhs plus 25 lakhs is 65 lakhs. 65 lakhs plus 20 lakhs is 85 lakhs. Okay. Have you understood this? Now, carefully observe. My cumulative cash flows are given here. My initial investment is 45 lakhs. Same example. Initial investment is rupees 45 lakhs. Now, how I am going to decide on the payback period? Carefully observe where in which year I get this return of 45 lakhs. Is it first year or second year or third year or fourth year or fifth year or sixth year? When in which year I get the return of 45 lakhs? That is, return means my initial investment.
Fifth
Fifth
year.
year. Yeah, correct. Between fourth and fifth year, correct? So you're getting this 45 lakhs somewhere between fourth and fifth year. So how I am going to calculate payback period is equal to 4 years. 4 years plus, very important dear students, between fourth and fifth year. What is my fifth year cash flow? Fifth year cash flow. My fifth year cash flow is 25 lakhs. Are you able to see this?
Yes, sir.
My payback period is between fourth and fifth year. My fifth year cash flow is 25 lakhs. And up to 4 years, my cash flow is what? 40 lakhs. So I need another 5 lakhs to reach my target of 45 lakhs, correct?
Sir.
Up to 4 years, my cash flows are cumulatively 40 lakhs. So I need another 5 lakhs to achieve this 45 lakhs out of the fifth year cash flow of what? 25 lakhs. So what does it mean? 4 years plus 5 lakhs by 25 lakhs. So I'm going to put it in decimal. 4.5 by 25 lakhs another. Decimal.
0.2.
0.2. 4.2 years. So my payback period is 4.2 years. Let me repeat. My payback period is between fourth and fifth year. Something after fourth but before fifth year. So 4 years plus what is the payback for the fifth year required to reach 45 lakhs? This is because that's my investment. So I need another 5 lakh to reach my investment of 45 lakhs out of the cash flow for the fifth year being 25 lakhs. So I need 4.2 years to get back my 45 lakhs. So my payback period is what? Payback period is how many years?
4.2.
This is how you need to calculate when you are cash flows are not uniform, when your cash flows are not uniform. Understood or not?
Yes, sir.
When cash flows are uniform, the formula is very simple. It is, you are going to divide it by the annual cash flow. Annual cash flows are referred to as annuity. I also told you what is cash flow. Cash flow is profit after tax and add depreciation. And you have to add depreciation. Got it?
Yes, sir.
Okay. So, without discounting, we will do a problem now, wherein we are going to discuss about the profit, cash flows and all that. Make a note. ITC Limited, I'll type it out. ITC Limited have decided to purchase a machine, to augment the company's install capacity to meet the growing demand for its products. There are 3 missions under consideration. The relevant estimated annual expenditure and sales. Sales are given below. All sales are in cash. Corporate income tax rate is 40%. Interest on capital can be assumed at 10%. This capital can be assumed at 10%. So particulars, machine 1, machine 2, machine 3. Machine 1, machine 2, machine 3, particulars. Initial investment required. Machine 1, 3 lakhs. Machine 1, 3 lakhs. Machine 2, 3 lakhs. Machine 3, 3 lakhs. So you have all the machines costing the same. Estimated annual sales, 5 lakhs, 4 lakhs, 4 lakh 50, 4 lakh 50. Cost of production estimated. Direct materials 40,000, 50,000, 48,000. Direct labor 50,000, 30,000, 36,000. Direct labor. Factory overheads 60, 50, 58. 60, 60,000, 50,000, 58,000. Okay. Administration overheads, cost or administration overheads 20, 10, 15. Okay.
Sir.
Yeah.
Sir, direct materials machine 3, 4 lakh 80, sir.
Sorry, 48,000. 48,000. Yeah, thanks. Yeah. 48%. Selling and distribution overheads. Or cost. 10, 10, 10. Okay. The economic life of machine. One is 2 years, while it is 3 years for the other 2 machines. The scrap value expected for machine 1 is 40,000. Machine 2 is rupees 25,000. And for machine 3, it's 30,000. You are required to find out the most profitable investment. Profitable investment based on payback period. Okay, very simple. Nothing to get worried at all because the cash flow ஒரே figure கொடுத்தேன், but இங்க cash flow நம்ம calculate பண்ண போறோம். So machine 1, machine 2, machine 3. Same, we are going to calculate sales லேந்து ஆரம்பிச்சு profitability statement போட போறோம். Sales லேந்து ஆரம்பிச்சு profitability statement போட போறோம். So investments கொடுத்திருக்கான் ஏற்கனவே, நம்ம cash flow array பண்ணணும். என்ன சொல்றோம்? uniform cash flows னு சொல்லிட்டோம். Uniform cash flows every year. So நம்ம என்ன பண்ண போறோம்? இப்போ salesல இருந்து profit array பண்ணிட்டு, profit after tax array பண்ணிட்டு, we have to add back depreciation, you get cash flows. So income statement போட போறோம். What is sales? Estimated annual sales 5 lakhs, 4 lakhs, 4 lakh 50. Less expenses. நான் எல்லாத்தையும் add பண்ணி ஒண்ணா போட்டாலும் ஓகே தான். ஓகே, தனித்தனியா போட்டாலும் ஓகே தான். Presentation purposes. Example நீங்க தனியா தான் போடணும். நான் இங்க சேர்த்து போறதுன்னு போடலாம். So repeat 40,000, 50,000, 48,000. Direct labor 50,000, 30,000, 36,000. Direct labor. Factory overheads. Factory overheads. Factory overhead. ஒரே நிமிஷம். Okay, factory overheads. So factory overheads is given as 60, 50, 58. Admin overheads. Admin overheads 20, 10, 15. Huh? Okay. Then S&D overheads. S&D overheads 10, 10, 10. That's all. So now you got all expenses. This is called total cost of production. Cost amount add பண்ணுவோம். So இது வந்து sales வந்து A ன்னு assume பண்ணா, B வந்து total cost of production. Okay. So எல்லாத்தையும் போட்டு cost of production போட்டுட்டு நம்ம அப்புறம் less interest போடலாம். So இது வந்து EBIT ன்னு சொல்லுவோம். So total cost of production எவ்வளவுன்னு சொல்லுவோம். இது எல்லாத்தையும் add பண்ணு. Adding up all this 1,80,000. Yeah?
Yes, sir. 1,50,000.
1,50,000. Very good.
And 1,67,000.
Very good. So sales minus cost of production. EBIT ன்னு வச்சுக்கோங்க. EBIT. So sales 5 lakhs minus cost of production 3,20,000. Then less interest at 10%. Investment at 10%. Investment develop adukku 5 lakhs. 5 lakhs ku 10% develop. 5 lakhs or 3 lakhs investment. First mission.
Sir, all 3
3
lakhs.
lakhs.
3 lakhs. So 30,000, 30,000, 30,000. So EBT. 3 lakh 20 minus 30. Hello. 3 lakh 20 minus 30. Correct up, administration cost, selling and distribution cost, S&D, depreciation where depreciation utacha, depreciation on miss on cost of production. ஒரே ஒரு ஆஸ்பெக்ட் மிஸ் ஆயிட்டு ஒரே நிமிஷம் depreciation மட்டும் ஆட் பண்ணி ஏன்னா காஸ்ட் ஆஃப் ப்ரொடக்ஷன் டெப்ரிசியேஷன் வரும். டெப்ரிசியேஷன் எப்படி கால்குலேட் பண்ணுவதுல காஸ்ட் ஆஃப் அசெட் மைனஸ் ஸ்கிராப் வேல்யூ பை லைஃப் ஆஃப் அசெட். காஸ்ட் ஆஃப் அசெட் is 3 lakhs minus scrap value for machine 1 is what? 40. 3 lakhs minus 40 by life of the asset. 2 years. எவ்வளவு வருது அப்போ depreciation? 3 lakhs is the cost of the asset minus scrap value 40,000. The whole divided by life of the asset. So 2 lakhs 60. By life of the asset is 2 years. So depreciation is 1 lakh 30. அதே மாதிரி second mission க்கு 3 lakhs minus scrap value என்ன? 25,000. 2 lakhs 75,000 by what is the life of the asset? Second year. Second mission க்கு 3 years. Correct?
Yes.
Correct. So 91, 667. அதே தான் இதுக்கும். 91, 667. Correct?
Sir, third one.
Yes. So third scrap value மாறி இருக்கு. Yeah. So third வந்து 3 lakhs minus 30, 270 by 3 years. 2 lakhs 70 by 3, 90,000. So இப்போ cost of production மாறிடும். So cost of production வந்து including depreciation போடணும். So add some. So cost of production. So cost of production அப்புறம் EBIT வரும், interest வரும். So EBT இப்போ சொல்லுங்க 1 lakh 90 minus 30. 1 lakh 60. Okay, this is your EBT plus tax. What is tax rate? Corporate tax rate. 40%. Tax rate question என்னப்பா கொடுத்திருக்கோம்?
40%.
40%. 40%. So 40% of 1 lakh 60. 64. 40% of okay. So 51,330. So you get profit after tax. 160 minus 64. $96, 77 and 97, 800. Now add back depreciation. You'll get cash flows. Add back depreciation. Depreciation ஏற்கனவே calculate figure add back பண்ணணும். 1 lakh 30, 91, 667, 90,000. So what you get is cash flow. Cash flow is profit after tax plus depreciation. புரியுதா? Are you able to understand or not?
Yes, sir.
Okay, now payback period, this is uniform cash flows. Okay, every year you're getting uniform cash flow. So payback period is equal to, now formula na கொடுத்தேன், initial investment of 3 lakhs by 226. You'll get 1.32 years. இங்க வந்து initial investment of 3 lakhs divided by 168,667. You get 1.77. Third case, 1 lakh 87. Initial investment of 3 lakhs divided by 1 lakh 87. So this is the lowest payback period.
Mission 1.
Mission 1. So conclusion. Mission 1 has the lowest payback period and hence the company should opt for investing in. Understood? This is how you work on payback period. Are you clear or not?
Yes, sir.
Any doubts?
No doubt.
All of you are clear?
Yes, sir.
Okay, great. This is how you need to calculate when the cash flows are uniform. When the cash flows are not uniform, you do it in a slightly different way. Okay. As I said, you have to do it like cumulative cash flows arrive பண்ணிட்டு நீங்க இந்த மெத்தட ஃபாலோ பண்ணுங்க. இந்த மெத்தட் இங்க கொடுத்திருக்கேன் பாருங்க. So this is the methodology for calculating payback period when the cash flows are not uniform. So when the cash flows are not uniform, you have to calculate cumulative cash flows. ஒரு வருஷத்துக்கு cash flow என்னன்னு கண்டுபிடிச்சிட்டு அது cumulative போட்டுட்டு எந்த இயர்ல உங்களுக்கு payback period கிடைக்கிறதுங்கிறது mathematically you have to calculate. This is how you calculate when payback is not uniform, and this is how you calculate when the payback is uniform. Simple. இது வந்து உங்களுக்கு நல்ல ஒரு காம்ப்ரஹென்சிவா நான் போட்டிருக்கேன். இது for better understanding of the whole process of determining cash flows. So cash flows in the whole approach புரிஞ்சிருக்கும்னு நினைக்கிறேன் உங்களுக்கு. Determination of cash flows, particularly இந்த cash flows ரொம்ப ரொம்ப முக்கியம். இதை பார்த்துக்கோங்க. Cash flows. Clear? Cash flows என்ன சொன்ன ஃபார்முலா? Profit after tax and
Depreciation.
To do that, you'll get something called cash flows, and that becomes the basis for calculating payback period. Okay. Now, discount factor அப்படிங்கும்போது NPV ன்னு சொல்லுவோம், discount factor சொல்லுவோம். There is something called a table. A table அவங்களே கொடுத்துருவாங்க. அது என்ன அர்த்தம்னா 1 rupee today at 10% discount factor is what in the next year. இப்போ calculator இருக்கா எல்லாத்தையும்? You all have a calculator?
Yes, sir.
The factor, the discount factor, how to calculate it, I tell you. அவங்களே கொடுத்துருவாங்க எக்ஸாம்ல நார்மலா, இல்லாட்டி நம்ம calculate பண்ணலாம். Rupee 1 at 10% discount factor. Find out value at the end of first year. Value at the end of first year. At the end of first year. அதாவது இன்னைக்கு 1 rupee நாளைக்கு என்ன வேல்யூ ஈக்குவலண்ட் ஆர் ரிவர்ஸ் நான் சொல்றேன், கேர்ஃபுல்லா அப்சர்வ் பண்ணுங்க. எண்ட் ஆஃப் ஃபர்ஸ்ட் இயர் கால்குலேட்டர்ல 1 divided by 1.1 பண்ணுங்க. 1.1ங்கிறது 0.1ங்கிறது ஃபேக்டர், டிஸ்கவுண்ட் ஃபேக்டரோட டெசிமல். 10%ங்கிறது 0.1. ஸோ 1 divided by 1.1 போடுங்க. என்ன வருது போட்டா?
0.909.
கரெக்ட். ஸோ 1 divided by 1.1 னா first year factor is 0.909. அப்படியே ஈக்குவல் போடுங்க, ஜஸ்ட் ஈக்குவல்னு போடுங்க கால்குலேட்டர்ல.
0.826.
அப்படியே ஈக்குவல் போடுங்க.
0.751. Yes, sir.
அப்படியே ஈக்குவல் டு போடுங்க.
683.
இதுதான் வந்து உங்களுக்கு எவ்ரி இயரோட டிஸ்கவுண்ட். அதாவது இன்னைக்கு 1 ரூபிங்கிறது நாளைக்கு 90 பைஸ் ஒர்த், ஆர் நாளையோட 90 பைஸ்ங்கிறது இன்னைக்கு 1 ரூபி ஒர்த் சொல்லுவோம். ஒர்த் ஆஃப் இட். So when you're going to determine the present value, you have to apply this factor. So my cash flows are going to be multiplied by, now in this problem, if I have to arrive at the discounted cash flows, carefully observe, year 1. Let us say, year 1, each year my cash flows are different. Okay, my year 1 cash flows. Year 1 cash flows is 5 lakhs. For a simple problem, example problem, okay. 6 lakhs, 7 lakhs, 8 lakhs, 7.5 lakhs. இது வந்து year 1, year 2 இப்படி போடணும். year 1 இப்படி போடுறத விட year 1, year 2, year 3, year 4, year 5 போடலாம். இல்ல okay, my year 1 cash flow is 5 lakhs, not uniform cash flow. My year 2 cash flow is like this. I put it this way, it will be easier. Okay, so now one more column insert பண்றேங்க, அதுல year போட்டுறேன். Okay, carefully observe cash flows year. So my first year cash flow is this, second year cash flow is this, third, fourth, fifth. Okay, my discount factor at 10%. At 10%. Okay. I mean, discount factor at 10%. I already have calculated this 0.909, 0.826, 0.751, 0.683. No equal to Podmo. 1 divided by 1.1 is equal to 50 year Podmo.
0.620.
620. இதுதான் நான் multiply பண்ணும். அதாவது multiply பண்ணா I get something called discounted cash flows. That is, I am going to multiply this column. இது column A னு வச்சுப்போம். Okay, column A. இது column B. இது வந்து A into B. So I am going to multiply this into this. I'll get discounted cash flows. Okay, have you understood this? This is an example problem. Okay, how I am applying this discount concept. My year one cash flow is 5 lakh and I am applying a discount factor. So நாளைக்கு எனக்கு year one ல endல எனக்கு 5 lakhs வருது. அதோட இன்னைக்கு equivalent value என்ன? 4,54,500. Because at 10% inflation rate, my today's 4,54,500 is tomorrow's 5 lakhs. That's the meaning. So I'm bringing the next year 5 lakhs into current year equivalent so that I can compare it with my current year investment cost, apple to apple. My investment cost is, let us say 15 lakhs or 20 or 5 lakhs. Okay, 5, 6, 11, 18, 26, 33. My investment is 25 lakhs. So I have to calculate payback period. My investment is 25 lakhs. 1 minute. Are you able to hear me?
Yes, sir.
So my investment is 25 lakhs. Now I am going to determine payback period. Discounted basis level. Now carefully observe, since the cash flows are not uniform, I need to do what? Cumulative cash flows. Cumulative cash flows. So 4,54,500 first year. Second year plus 4,54,500 plus this. Nine lakh 50. So plus 9 lakh 50 plus 5 lakh 25 plus 14 lakh plus 5 lakh 46 plus 20 lakhs plus this. So my cumulative cash flows is 24 lakhs 87. So my investment is 20 lakhs in forward or 18 lakhs for easy understanding. Okay. Now carefully observe, dear students. This is, have you understood this? My cash flows are given here. I am discounting it, applying a factor, discount factor, and this is called as discounted cash flows. Discounted cash flows. This is, I am multiplying A and B, and cumulative cash flow is, I am keeping on adding this, I am getting this at the end of 5th year. So my cash flow cumulative is 24 lakh 87. In which year I am crossing 18 lakhs? In which year I am crossing 18 lakhs? After which year? It's between 3rd and 4th year. Are you able to see this? Are you able to see this? Between 3rd and 4th year, I am crossing this initial investment of 18 lakhs. Are you able to understand this?
Yes, sir.
So my payback period is equal to 3rd year plus in the 4th year, I am getting cash flow of 5,46,400. Look at this carefully. I am getting a cash flow of 5,46,400. And to reach 18 lakhs, how much I need? 1475,800, 18 lakhs more difference. 18 lakhs I have to reach to convert, to cover my investment of 18 lakhs. So in 3rd year end, I have got 1475,800. So 18 lakhs to 1475,800, what is the difference?
3,24,200.
Very good. 324,200 divided by 546,400. So 3 plus. So இங்க என்ன சொல்றேன், 3rd year அப்புறம் வருது எனக்கு, and I need to get this 324,800 is what? 18 lakhs is my investment minus 1475,800. So I need to get a cash flow of 3,24,000, whatever you said just now. 1 minute. So I need to get a cash flow of 3,24,200 out of the total of 546,400, which is my 4th year discounted cash flow. So 3 plus this. So 3 plus this. What is this? 3 plus is the decimal என்ன வர சொல்லுங்க பார்க்கலாம்.
0.593.
3.593 years. So it is going to take me 3.593 years to pay back, to get a payback under discounted payback method. Have you understood? Any doubt?
No doubt.
All of you clear? All of you are clear? I'm not hearing from
Sir.
anyone else. All of you are silent. So hope you're all able to hear me. Preeti, are you clear?
Yes, sir.
Sahana, are you clear?
Yes, sir.
Madhumita,
Yes, sir.
Anirudh,
Clear, sir.
clear. Okay, Sai Lakshmi,
Yes, sir.
Shruti,
Yes, sir. Clear.
Srihari,
Yes, sir. Clear.
Venkatesh.
Yes, sir.
Okay, இதுதான் அந்த கான்செப்ட் ஆஃப் டிஸ்கவுண்டட் கேஷ் ஃப்ளோஸ் யூஸ் பண்ணி பேபேக் பீரியட் கண்டுபிடிக்கிறது. So it's very simple, but it involves a lot of arithmetic. இந்த கான்செப்ட் இது நம்ம போட்டிருக்கோம் இல்லையா, இது வந்து இதுலயே நம்ம என்பிவியும் கண்டுபிடிக்கலாம். Net present value is equal to cumulative discounted cash flows of the project minus initial investment. So what is the cumulative cash flow? நான் ஏற்கனவே அரைவ் பண்ணிருக்கேன். 24,87,200. 24,87,200 minus initial investment என்ன சொன்னேன்? So what is my net present value? ரெண்டுத்துக்குள்ள difference. My initial investment is 18 lakhs. My cumulative discounted cash flow is here 24,87,200. And ரெண்டுத்துக்குள்ள difference தான் என்ன? 6,87,200. Are you able to understand this calculation, net present value?
Yes, sir.
Yes,
Since
sir.
NPV or net present value is positive, the project is viable. I can take up the project. And I can also calculate profitability index here. Simple. Cumulative cash flows divided by initial investment. What is my cumulative cash flows? 24,87,200 divided by 18 lakhs. What do you get?
1.38.
1.38. So, very important conclusion, 1.38. Since if profitability index is greater than 1, then the project is viable. Other subtraction is the division. இங்கேயும் அதே டெசிஷன் தான் வந்திருக்கு, இங்கேயும் அதே டெசிஷன் தான் வந்திருக்கு. ஏன்னா if NPV is positive, project is viable. Naturally, it leads us to a conclusion that if profitability index is greater than 1, the project is viable. So profitability index is 1.38, NPV is 687,200, payback period is 3.593 years. எல்லாமே போட்டாச்சு இந்த எக்ஸாம்பிள்ல. புரியுறதா உங்களுக்கு? All of you are clear? Anyone has got any doubts?
Clear, sir.
No doubt.
Okay, great. All right. So I think we made a good start and we continued with this topic today. We have a lot more interesting problems to cover in this topic using discounting techniques and all that. So we'll continue with it in the next class on Thursday next week. So tomorrow, Friday, we are going to have accounting standard 14, where we are going to cover amalgamation of companies. And after covering AS 14, we'll be continuing to do problems on amalgamation of companies. So tomorrow we'll have same time. So direct class only, but today I had some personal work, so I had to have a class online. So tomorrow we'll try and have direct classes. I wish all of you attend that, because as I said, a lot of efforts are going into organizing these direct classes. So I observed that slowly the direct class students are dropping for whatever reason. So I don't want that to happen. So I would recommend all of you to attend the direct classes. ஏதாவது ஒரு ரீசன் சொல்லி நீங்க அப்படியே ட்ராப் அவுட் ஆகாதீங்க. ஏன்னா நீங்க சொல்லி தான் நான் டைரக்ட் கிளாஸ் ஆரம்பிச்சேன். அது மட்டும் இல்ல, டைரக்ட் கிளாஸஸ்க்கு வந்து சில அட்வான்டேஜஸ் இருக்கு, இல்லைன்னு சொல்லல. But online classes are also equally good. But those who can come, you please come for the direct classes. Some of you may be far off, you may not be able to come, I agree, I understand. But those who can afford to come, who can arrange to come, please come. ஏன்னா திடீர்னு இப்படி எனக்கு டைரக்ட் கிளாஸ்ல ஒருத்தர் தான் இருக்காருன்னா என்ன யூஸ் சொல்லுங்க பார்க்கலாம். I also have to take a lot of administrative steps to reach the office, set up things and do things. So everything is involving time and effort. So அதுக்கு யூஸ் பண்ணணும்னா எல்லாரும் வந்தாதான் ஒர்த்தா இருக்கும். எல்லாரும் நீங்க வீட்ல இருந்தே அட்டென்ட் பண்ண போறீங்கன்னா நானும் வீட்ல இருந்து ஆன்லைனே எடுத்துடலாம் இல்லையா? So please understand that. So those who can come, please drop in and attend the direct classes. As already said, if you made a choice to attend direct classes, you have to continue with it. And if you made a choice of online classes, you have to continue with it. Only on special occasions I can give you the permission. So don't assume it's permission is forever. So you need to attend. Otherwise, you opt for online directly. Then only I can make some administrative arrangements correctly. Otherwise, it becomes very difficult. So hope you all will understand and cooperate. So continue to attend all the direct classes. It will be interesting for me also and for you also. So kindly drop in for the direct classes tomorrow. Those who opted for direct classes, others continue to attend it online. Okay, I'll meet you all tomorrow again. Thank you. Take care. Have a nice day. Bye.
Thank you, sir.
Thank you.
Yes, sir.
Thank you. Take care. Bye. Yeah. Take care. Bye. Thank you.